We will get started here in just a moment. I believe more people will be showing up here shortly. Hi, Mandy. I see that you raised your hand.
Can
I
you hear
believe,
me?
yes, I can hear you.
Hey, listen, I have a quick question because I feel like the nature of this Zoom is for people who are receiving 1099s. I am actually a small business that is passing out 1099s. And I have a question about that. Is this an opportunity for that question, or is this is not that opportunity?
Nope, this is definitely the opportunity. The way this session works, and hopefully we'll have more people coming in. I think my marketing person got this out a little late, so we may not have many people this month. Um, but the way this webinar, if you want to call it, works, this Zoom session, is that I do a small introduction of what is like a 1099 and what do you use it for and so forth, and then we open it up for question and answer. The questions and answers is open to anybody to ask any kind of business related or tax related questions. So yeah, you're definitely in the right place. And I'll tell you what, we only have two people right now, so why don't you go ahead and ask your question, and we'll start right out with that. I can do.
Okay. All right. So I have, and I did this last year, and that's why I'm confused. So I've created the 1099 NEC for my husband's contracting business. And last year, I remember, we mailed the 2 copies to the independent contractors. And then there's copy A for the IRS, and there's copy 1 for the state tax department. Now, I feel like, because now that I've Googled it this year, and these have to be submitted to the IRS and to the State Department by the 31st of January. And I feel like maybe my accountant did this piece last year, but upon Googling, it seems that I'm supposed to, and I've done this, I've printed out a 1096 form, and I have to include this in the one that goes to the IRS. Is that correct?
Yes, you are so far. Yep.
Okay. So it says here, it has to go into a flat mailer, not folded. Like, these are all things that I feel like I would have remembered if I did this last year. So I think this is something maybe my accountant took care of, but I don't recall when we did our taxes last year. So, and we're not going to do them before the end of January. So each individual 1099 NEC has to be submitted separately to, and I think Pennsylvania goes to Utah, if I'm not mistaken. And I have to include the 1099 NEC with this form 1096 to the IRS version. And then for the State Department, I can just mail it to the State Department address, correct?
Yes.
There's no cover sheet for the State Department, basically.
There is. That's why I was just looking that one up to make sure here.
Okay.
Yes, there is if you do a search on the internet for PA Rev, REV 1667, 1667. And that is the cover sheet, like the 1096.
Oh.
That is the cover sheet for Pennsylvania.
Okay.
And then let me see here if I can just verify the address that you're going to send it to Pennsylvania. I mean, you said you think you found it, but we'll just make sure here.
Yeah, because I know the one in for the IRS, like, there's a bunch that go to Austin, there's a bunch that go to Kansas City, and we were on the third batch of that. Pennsylvania goes to Ogden, Utah, in regards to the 1096 and the 1099. So, but I didn't find anything for the state. Because I didn't even look.
Right. And I was just thinking, I was going to do a question and answer with the Pennsylvania Department of Revenue's website. However, right on when you find the Rev 1667.
Huh?
The address will be right on it. It's
Okay, perfect.
yeah.
That makes
You
sense
go,
because they have the instructions and stuff.
yes, yes. So when you find that form, which I looked it up really quick here, and the address is right on that form.
Perfect. Wonderful.
And
And
so if you ever decide to have your accountant do it, what you would do is you would contact them in January. You'd give them a W-9. That's what your vendors, your subcontractor is supposed to fill out for you, is that
mhm.
W-9. And so you'd give that to the accountant, plus you'd give them the dollar amount, and then they can get that filed. And a lot of times accountants will just mail it for you, or e-file what if
That
they
must be
file.
what happened
Yeah.
last year because
And then
I'm
you get
not,
your tax return done later is normally what you do. Yeah.
yeah, I'm not remembering any of this from last year. And so we have a great accountant. He's wonderful. But now that we're doing more business, he's starting to charge more.
Mhm.
So anything I can take off of his plate, will be good. Will be good
Yeah.
for us and for our expenses.
Yeah,
So,
absolutely. And doing 1099s are pretty simple. I don't think they're that hard. The If you do get, I believe it's 10 or more, let me see something here, then you have to file electronically.
okay.
Let me see here. But quick here for you. And when you do this, because this is stuff I was going to talk about, but I think, let me see, do we still have just two in here? There's, yeah, two people in here now. So everybody's, the couple's listening here. As long as they're postmarked by the 31st,
Uh-huh.
or it's considered to have been received by the recipient. So a lot of times people think they have to have it in their hand. Like you have to get it mailed early enough to get it in the person's hand by January 31st. But we all know we can't control the postal service. So therefore, as long as it's postmarked by January 31st, you are definitely good.
Okay.
Yes, and it is 10 or more it looks like it's 10 or more for federal and state, before you have to file electronically.
Okay.
So if you're just doing one, yeah, send it by mail.
Okay. Okay. Yeah, I feel pretty smart. I feel like I've made incredible progress.
Good.
And that was the one hang up where I
Yeah.
was like, oh, like I gotta do this,
Yeah.
this has to happen.
Right. Right.
And
Absolutely.
also, so I have and I don't want to monopolize everything. If does the other person have any questions they want to ask right now before I ask another one?
Hi, Mary. How are you doing today? And some people come in and they cannot unmute themselves because they don't have a microphone or something.
Oh,
There,
okay.
she did.
Let's
How you
try
doing,
that.
Mary? Yeah.
Good. How are you doing?
Very good. Do you have any specific questions for me?
Well, actually kind of new to having business returns. So kind of one of those things. I do not have an accountant, and my tax guy, I'm actually kind of battling with my tax guy because they parted ways last year, and the one is saying my taxes were done correctly, and the other one saying my taxes were done not correctly. So I'm sure I have a ton of questions. So if you're going to talk about something specific, I will let you go, and then kind of maybe at the end I can jump back in with some questions that I have if you want to do
Okay.
that.
Okay. Okay. Let's see here. Chat here. Hey, we have John with us. Some people come back every month, so John is back with us. So I'll tell you what. Let me cover a little bit about the 1099 NEC that was part of the flyer there, and then again we do open it up to all questions and answers, whether it pertains to the 1099 or anything business related. I'm more than glad to try to answer. And I am an accountant by trade, so I can answer a lot of tax related questions too. That's the experience that I have. So I'm just going to go ahead and mute everybody here for just a moment. Okay, you muted yourself. There we go. Okay. So with the 1099, we kind of covered a little bit of it there, is that it needs mailed out by the end of this month. Question is like, how do I even know when I have to send a 1099? Or on the flip side, how do I know if I'm going to maybe receive a 1099? So let's first talk about sending it, which will also answer the questions about receiving it. Okay. So sending it. If you have some subcontract work, then there's a high chance that you have to send out a 1099 NEC, non-employee compensation. It If it is $600 or more for the year, not in just one payment or two payments, but just whatever it adds up to for the year for that one subcontractor, then you may have to send a 1099 NEC. First off, what you do though is you get your vendors to complete a W-9 form. You can go onto Google, say, and do a search for IRS form W-9, and it's free to find. So I mean, it should be like the first result, but you do have to be careful because there's a lot of scamming websites out there. So if you don't find like a PDF that just automatically loads up as the W-9, then go backwards because you're on the wrong, you clicked on the wrong website per se. I just want you to find the result that loads up a PDF right on your screen. Now it's normally a fillable PDF. However, if you fill it out while it's loaded up in your internet, most of the time it doesn't save, at least it doesn't for me. So you want to make sure that you download it first. Normally, I think up in the upper right hand corner, there's a download button. You want to download it, it'll download it to your computer. Then you got to go into your downloads folder on your computer and open it from there. When you open it from there, it should then be a version that you can type into. And when you click save or do a save as, then you can save it and create a new one if you have multiple people that you need to send them to. When you receive the W-9 from your vendor, or when you're getting the W-9 from your vendor, subcontractor, things like that, it's best to get that W-9 the very first time they do work for you. Trying to track them down at the end of the year or in January right now, and trying to get them to complete the W-9 and send it back to you is very hard. Whereas when you have them working right there in front of you, doing the work for you, have them do the W-9, even though it's the beginning of the year and you don't need it for almost a whole year now. Get it right away so that you don't have to track people down later on. With the W-9, when they fill that out, there's marks on it that tells you whether they're like a sole proprietorship, partnership, corporation. So if they are if they're anything but an S corporation, then they need a 1099. So if they're a sole proprietorship, partnership, if they're an LLC taxed like a sole proprietorship or an LLC taxed like a partnership, then they're going to receive a 1099. If they're a corporation, and there's like two main types, there's the C corporation, that's like a publicly traded company, such as like think of Walmart, although it could be smaller, but think of a company like that where you can buy it on the stock market, or even an S corporation. So I own my own business and I'm an S corporation, but that still makes me a corporation. So I do not receive a 1099 from my subcontractors. Now there are certain circumstances, like if you're a corporation that's an attorney, then you may have to receive a 1099 even though you're a corporation. So there's a few different types of S corps and C corps that do receive 1099s, but most of the time they do not receive a 1099. The only way to know that though is to get a W-9 filled out from them and see what they check mark on there. And as I mentioned earlier, then you can take that W-9 and the dollar amount that you paid each person, and you can give that to your accountant, in January so that they can file the 1099 for you, or you can do it yourself. You know, you can through the IRS. IRS, you normally just can mail it. Pennsylvania, you can mail it too, but if you have a MyPath account, you can actually file it on MyPath as well. And so if it's less than $600 a year, you do not have to file a 1099. People, I'm hearing these questions all the time right now from people that, what if I gave them cash of $500? Can I write it off through my business? Yes, you can. I mean, if it was a business expense, then you can pay them, even though it was $500 cash, you can still write it off on your tax return. Now, by law, they're supposed to claim that as income as well. Will they not? That's up to them. You got to think about yourself. Now, if you portrayed it to someone that as, hey, I'm just going to give you cash under the table so that you don't have to claim it, then you can't write that off either. I mean, really, it's all wrong anyhow, but I'm trying to logically think through it with you. If you're telling them that I'll give you cash and you don't have to claim it, then you can't claim it either as a write-off, because you're telling them to do something wrong. So you can't do it wrong either. You got to do it wrong also. Okay. And two wrongs don't make a right. But then you come down to the idea, well, I get audited, things like that. I'm not going to get into that, but audits are very rare for our small businesses. However, again, the black and white of it is, even if you want to give somebody cash, just give them cash. Don't try to explain to them that they don't have to claim it. And then you leave it up to them what they want to do. As for you, you can write it off as a business expense, even though it's less than a 600 and you did not give them a 1099. Now, as we talked about, that 1096 is a cover form that goes with the 1099 to the IRS. You can find both those forms on the websites on a search. Also, the PA Form 1667 is the cover letter for the 1099 for the state of Pennsylvania. Let me see here what else I wanted to cover with you. If you're having somebody fill out a W-9 and maybe it's their first time filling it out and they're like they don't have an EIN number, that's okay. They just write their social security number down there. But that's all the more important why if you are operating off of just a social security number, you really should get an EIN number. An EIN number is absolutely free to obtain. I can go to the irs.gov website right now, and it's right on their home screen, smack dab towards the middle on the left. I think I just saw it. And you can get an EIN number instantly for your business. And so for you to give a 1099 to somebody, if you are using your social security number as your business's identifying number, then you are giving all of your vendors your social security number. How crazy is that? Really think about that. Okay. So get an EIN number. That becomes your business's identifying number. That's what goes on the 1099. You give that to your vendors and anybody else that may ever need something from you from now on. Instead of social, use EIN. And wow, I'd rather have my EIN number floating out there than my social security number. Okay. Let me see what else here. I think that's pretty good. I just know that this is the time of year that people are thinking about it. So I wanted to touch upon that and get people to, think about doing this. I see people still filing 1099s in February, March, April. I've never seen anyone get fined for it. Okay. I think the IRS is probably just happy that you're letting them know that you gave a 1099 to somebody so that they can then look on the other end and make sure that that person claimed that income. So they're probably just happy. I've never seen anyone get a fine for that. I've also had people that say that they don't 1099 anybody, even though it is over $600. They say, if the IRS wants to come audit me, let them come audit me. And I mean, I can think of one guy specifically right now. He's never been audited, so hopefully he never gets audited. Um, and so nobody knows right now whether you need to send a 1099 or not. But when you file your tax return for the business, there's a place on there for professional fees. I think is like sometimes what you'll see, or other times it just says like contract labor, something like that. And so if you put a dollar amount in there, and especially if it's more than $600, sometimes I've seen businesses that would put in that box like thousands of dollars, like $2,000, $3,000, and um, and so that to me is a flag to the IRS to say, okay, here's a dollar amount. Oh, and by the way, a lot of these tax returns have a check mark, a yes or a no check mark saying, were you required, okay, which would be by the law, okay, were you required to file 1099? And if you mark no, but then farther down you put in these dollar amounts and you put in thousands of dollars, that's kind of a red flag to the government to say, that almost looks like they should have 1099 somebody. And so they could end up auditing you. And then if they do audit you, they have a right to see all of your bookkeeping information, all of your receipts, all of your bank records. And if they look at your bank records and they see that you're writing out checks to the same person, or giving cash, and you have it written down somewhere, cash that you're giving to the same person, and it adds up to more than $600, then you get in trouble for not filing a 1099, and they'll fine you and things like that. Okay. See here. So I think that's about everything. So the way this session works for those of you that are brand new, and we kind of just jumped right into a question right from the bat, right from the get-go, because we only had a couple people, and that's totally fine. My name is Corry Riley, by the way. I'm not sure I got to that even. And this is Tax Talk with Corry. We hold this every month. Normally, I think, and now without looking, I can't tell you, but normally I think it's the third Wednesday of the month, although we moved it this month because of a late start with the holidays and everything. We got late start on getting it marketed. And I think there'll be one more. I schedule them out through June every 6 months. So I think it's May. I have to move either to the Wednesday before or the Wednesday after because of other professional development that I'll be doing. So if you keep your eye on your emails and things like that, you will end up seeing when the next tax talk is. The way this always works, as I said at the beginning, is about 10-15 minutes, a little more this time because I hung on a little bit there. Is I speak about one subject, and then after that 10 or 15 minutes of that one subject, I open the floor up for everybody to ask questions, whether they be specific to that subject that I just talked about, or anything else tax related, or anything else business related. You have me basically until noon to ask all of your questions. So with that said, I have two hands in the air right now, and you don't have to put your hand up either. I'm going to go through everybody and let everybody ask some questions. So I'm going to start off with Jonathan Torres. You came in here last. So if you're able to unmute yourself, feel free to unmute yourself and ask any questions that you have. Or if you do not have, actually, I'm just opening up my Q&A right now. If you
Hello,
don't, hi, how you doing?
I'm doing good. So I
Good.
recently started a business. I started this month. It's my first, first time getting my LLC, doing all that stuff. I'm actually, pretty new to all this, but I've, soaked up a lot of information from YouTube, from a business consultant that I've had through I think it's called the Small Business Association and all that. So, I wrote the question. Now I said, so I have a music teaching business. Now I do have my brother who's a minor, who's 16, and
But
because we're a little lost with this whole thing of, do I put him as an employee, or since he's a family member and he's a minor and he's not really making much money, he's maybe making like 5 to 12,000, and like the 12,000 is a really high range, but I'm saying like that's probably what he would just make like at the max. Like there's no way he's passing that. I'm just confused. Can I put it as a business expense? Will it bring me problems? Like I'm using Zelle for him. Like for example, I get paid through Stripe and then I Zelle him the money. Is that an issue? I'm just a little lost with that.
Okay. So your brother started teaching as well. Okay.
Yes.
That's I'm reading your question there. Um, so So this question really comes down to just ignore the idea that he's your brother.
Okay.
If you hire him as an employee, there are taxes like unemployment compensation tax that you don't have to pay on a brother. Okay, but before we even get there, let's just talk about the idea of a person being an employee versus a subcontractor. An employee, you tell them when to work, as in you tell them to come in at this time and leave at this time. You tell them what to do while they're working for you. You tell them, you give them the tools to do the work while they're
Mm-hmm.
working for you. Um, that is an employee. You're their boss basically. Versus a subcontractor, you are not their boss per se. You let them schedule their own work time. You let them use their own tools. Okay. Now, in the music business, depending on what you're talking about, you might be talking about like guitars or drums or other instruments,
Yep. Yep.
singing lessons.
Computers, screens, all that. Yeah.
Yeah. So if they're using basically their own stuff, mostly their own stuff, then they're not using your tools, your supplies, your equipment. They're mostly using their own. And I'm not saying it has to be 100%, but mostly they got to be using their own stuff. So they schedule their own time. They teach with their own methods. You don't tell him how to do this and how to do that in his methodology of teaching, uh, with his expertise, and they use mostly their own equipment. So that would be like a subcontractor. And I can think of right now in my area, I know someone very close that is um, a music owns her own music teaching business, and I know that she has her own place, okay, with different rooms in it, and she has other teachers that come in and use those rooms, but they actually kind of schedule their own appointments,
Yeah.
and they come in when their customers come in, and they mostly use their own equipment to do the teaching. That fits into the subcontractor model. Okay.
Okay. Yeah.
So so you got to decide from basically what I've said, and you can ask for clarification as well. But basically, use what I've said to decide: is he an employee or is he more of a subcontractor? I kind of hope, especially, I mean, I don't know what your revenue is and things like that, but it would be easier if he does fit into the subcontractor model. But if you're looking at it like, no, I think he's really an employee, then you have to set him up as an employee by law, so that if you get audited, then you don't get in trouble. And I will say the government does look at the idea of employee versus subcontractor. The government does look at that closely at businesses, because they want somebody like a person working for you. They want them to be considered an employee instead of a subcontractor. So you have to make sure you draw that line pretty close.
Okay.
So,
Realistically, he is more of an employee. He's using my equipment that I bought. He's using well, we work on the lessons together. We do build them off together. He comes up with the lesson. I put it into PowerPoint and I put it into the app we use to record and all that stuff. Um, so he's a mix of both. That's the thing. Like some of the things you said match up with the subcontractor, and then some of the stuff matches up with an employee. Because I do find students for him. It is my I do the scheduling. So I do tell him when to come in and stuff like that. Uh
yep.
yeah,
So that
so
so that sounds more like an employee. So then let's go down that road. So he's an employee.
yeah,
So you do
yeah.
need to get on payroll and things like that. The only other option is that you call him a volunteer, because he's your brother. Maybe just have him be a volunteer, and then I mean, well, but then I look at the $5,000 to $12,000. I mean, you can't just voluntarily
They
give you
volunteer, yeah.
that kind of money, So
Yeah.
so really probably the best route to go is to set him up as an employee. And he may very well want that too, because then he can add that to his resume. So as he gets out of school, if he's going to decide to go to college or something, that can go on his application and so forth, that he has this experience as a working for a music teaching company. So yeah, getting him set up as an employee and making $5,000 to $12,000. I mean, that's pretty good money actually for a kid.
Yeah. Now I have another question. Sorry.
Yeah.
Um, is there a certain like poster or something we need to have up when we have employees? Like, I know that things change a lot when we have employees. Do we have to give them health, like, health benefits, dental benefits, and all that stuff? Just I know we pay. I know when it comes to an employee, what are the steps to be able to add him as an employee? And like, do I need to provide him benefits?
Right. So those types of benefits are totally optional benefits. So no, you don't have to give those benefits to him. Now, if you have other employees and you have an employee benefit package where all of your employees are eligible for the health benefits, you can't just pick one and say, "Hey, because I like you, I'm going to give you health benefits, but I'm not going to offer you health benefits." You can't do that. If you offer anything, you got to
Yeah,
offer it
yeah,
to
yeah.
everybody. But if he's your only like employee, then you do not need to offer health, dental, retirement, vacation. None of that do you have to offer him. Now, if he's an employee, you'll have to have workers' compensation insurance. That's required by law. And I mean, that's there could be maybe some others, but I mean, at the very basic level, that's about the only benefit you have to give him. And so you just have to set up and obtain payroll account numbers through the IRS, through the Pennsylvania Department of Revenue, as well as through your local tax collector, which depending on where you're from, like where I'm from, it's Berkheimer or Keystone Collections Group, but there could be others, there's probably others out there throughout Pennsylvania too. So the best thing to do is if you're going to try to do payroll yourself, then you may want to reach out to your local SBDC consultant at this, where I'm from, the Small Business Development Center.
Yeah, yeah, yeah.
There's 15 centers across Pennsylvania, so you may want to talk to them and say, what do I need to do to set myself up to do this myself? And if your consultant doesn't have experience, I would hope that they would ask if any of their other coworkers do. And then I know that if they don't have anyone within their SBDC to reach out that can help you, a lot of times they reach out to certain peoples like myself that does have that experience. And then I'll help you from afar, okay, via Zoom or something,
Yeah,
get
yeah.
yourself set up. Or if you're like, you know what, I don't want to deal with taxes. That's way beyond what I want to deal with. I know how to teach and such, but I don't want to do taxes. Then you're best to outsource it to your local accountant that does your tax return. They normally do payroll as well, and they'll be able to help you out with that.
Okay,
So,
perfect.
with that said, Jonathan, if you have other questions here, hang on to them. If you're able to stick with me till 12 o'clock, I'm going to
Yep.
rotate through asking some other questions or seeing questions from some other people. And then, and then, and then I'll come back around to you if we still have time. Okay.
No problem.
Okay. So John Thomas is putting it in the chat here as well, or in the Q&A. John says, does the W-9 that is sent back to me have to include an original signature, or will a copy or PDF of the W-9 document suffice for IRS, Pennsylvania Department of Revenue? To my total understanding, they can submit it back to you electronically without that, what we call wet signature, which is where they literally signed it and then scanned it or something. From my understanding, as long as they, if they send it to you via email or something, you might want to keep that email. Just to show that it did come from them, okay, with that information on there. Next question he had here, real quick. If I pay individuals for referrals to my business, do I have to send them a 1099 even though there is no written agreement contract between my business and the person making the referral? That's a good question. Let me see if I can find that answer real quick here for you. Okay, so just quickly, although this is not this is not a deep, I didn't do a deep search to verify this, but it is matching up with what I was thinking. So I'm going to kind of go along with it as of right now, that yes, if you are, as an example here, if you are a real estate agent and you have somebody, that is a great referral person for you, and they're sending referrals to you, and you end up giving them like a $800, I think, like in the car business, they call them spiffs or something. You end up giving them like $800 of money to, for a referral they gave you. Okay. Then yes, you'd have them fill out a W-9 form and give them a 1099. Now, if there's small dollar amounts that never add up to $600 for the year, then no, you don't need to. So sometimes I've seen businesses give like $20 spiffs or something, or even $50 spiffs, referrals. Okay. And a lot of times what I've seen, if you're only giving like $20 here, $50 here, a gift card here, a gift card there, valued at $20 to $50 or something like that. I've seen where people don't even, businesses don't even track that, okay, because they're small, such small dollar amounts. But again, if it would add up to 600 or more, you really should do it. However, again, if you were to give a referral amount of $600 or more right off, like in one check, then you probably are looking at having to do a 1099 for sure. Okay, without a doubt. So I hope that answers your question. Again, if you need more information on that, because that was not a deep dive into the research there, then I'd be glad to reach out to your SBDC consultant. I always say first, reach out to your local SBDC consultant, see if they can do the research for you. And if not, then feel free to reach out to me. And you did mention, John, about even though there's no written agreement or contract between your business and the person making the referral, there doesn't have to be any kind of contract for that. Okay. Even in my own business, I have a referral program set up, and it's actually based on 10% of whatever they paid me for that service for that year. If they refer people to me, I'll look back at what my client paid me, and I'll cut them a check for 10% of whatever they paid me, and I'll send the check to them. And people can, that client could refer 5 people to me in a year, and I keep track of that, and I would take 10%, 10%, 10% and give them a bunch of money. But for me, it never adds up to $600 or more for the year, so I'm not having to worry about it. But coming back to your question, I have no really written contract on that. There's nothing that we signed that said you're going to be a referral for me or anything. I just give them a quick little flyer that says, hey, look at this. And if you refer people to me, this is what we do for you. It's all on this little flyer right there. And then they do what they want to do after that. So good questions. Excellent questions. Okay. So let me come back to let me move that over here. Okay. That was all the questions in the Q&A. So Mandy, do you have any other questions, Mandy? If you do, go ahead and unmute yourself.
I do. I have 3 questions.
Okay.
The first one is, with the W-9s, we don't have to mail those anywhere, correct? We just hold those for our own files?
That is correct. Hold them for
Okay.
your own.
Now, you have mentioned you can create an EIN. Do you can create an EIN without an LLC?
Oh, absolutely. Every type of business, whether you're a sole proprietorship, partner, well, if you're a sole proprietorship, yes, you can get an EIN number. If you're an LLC, you automatically get an EIN number. If you're an S corp, you automatically get an EIN number. And partnerships, I think you're not required to get an EIN number, but you should.
Okay, because I've formed several LLCs, and then they gave me an EIN. So I guess I was never in the category of sole proprietorship where I could have gone and generated my own. So
Yeah.
that's good to know. Third question, I printed out that Rev 1667 that you mentioned. Now, this is for my husband's business. Now, for my business, I have a W-2 employee. I have a MyPath, and I did my annual reconciliation online. And I had kept track of quarters, you know, like in my personal bookkeeping. But now I'm looking at this and this appears to be different. It seems that with this, I can mail all 3 1099s with this form. It says number of 1099 forms. And then total compensation, I would total up everything that we paid out. But we didn't, in my husband's business, which I guess we'll do it differently this coming year, I didn't keep track of quarterly breakdowns. Am I going to be in trouble if I just write the grand total in the 4th quarter?
So no, you won't get in trouble, and that's where I was leading. If you didn't get there, is if you don't have the quarterly amounts for the 1667, just put a dollar amount in the total column, and for the Pennsylvania tax withheld, just put 0 in there as well, and send it. And
Okay, perfect.
if next year, if you want to figure it out quarterly, go right ahead. Otherwise, just put the total down there. I've never seen an issue with that.
Okay, because I know that like businesses do have I don't know. I mean, this is what I think I know. Businesses have a choice whether they do it quarterly or they can just do it once a year. Like for my business, I've chosen to do it quarterly. And I think is it sales tax now that you have to do it monthly?
It depends with sales tax. It depends on how much you collect over a period of time. So when you first sign up for sales tax through Pennsylvania, you'll be set up on a quarterly basis. And then and you'll start to submit the sales tax every quarter, and the Pennsylvania will look back to see how much you are collecting in a quarter, and I believe it's $300 if you're collecting and submitting $300 or more in a quarter over, I think maybe 2 quarters, then they will switch you the next year to be a monthly submitter.
That makes sense because my business is a seasonal business. And I was cranking for the first time with a POS, W-2 employee, workman's comp insurance, June, July, and August. So then I can see that I fit the criteria for what you just described, which is why I would have received a notice saying they want monthly reconciliation. That's fine. Okay.
And if something were to happen in your business and you have like a slow year or something, you may get a letter before the end of the year. Each year, that can happen each year. Before the end of the year, you may receive a letter that'll even switch you maybe back to quarterly. Or for some of you that are listening, you may even go from quarterly to semi-annual. So those are your 3 options that Pennsylvania can put you on, and you have to just follow it. It's either you pay sales tax twice a year, quarterly, or monthly.
Okay, last thing. This is nitpicky. I printed out this 1667. It's black and white. Do I need to print it out in color?
No, black and white is fine.
Okay. All right. Thank you.
Now the 1096, I believe, is red, and that one should be printed in red.
Yes, that is red, and very clear that I have to mail it in a flat mailer.
Okay.
Which I'm glad I noticed. I mean, I'm glad I noticed that because I would have folded it. So
yeah, I myself, I'm trying to think if I ever mailed them in folded or not, because I probably didn't read that part of it. I probably just folded up in a business size envelope, sent it. I think the reason they say that is because they're going to send it through a scanner. Pennsylvania is going to do the same thing, send it through a scanner, and the fold could cause an issue there. And then therefore, if it causes an issue with the computer, then they're going to have to do it by hand. So I'm glad you said that, because I mean, frankly, I would have just, because I've done them for so long, I would have just filled it out and shoved it in a small envelope. Probably still no, to be honest with you.
Always something to learn.
Yes.
Taxes are a moving target for sure.
Yes, exactly. Okay, well, Mandy, I'm going to go ahead and let you go for a moment here, and I'll move on to Mary. And Mary, if you have any questions, feel free to unmute yourself or put it in the chat. I see here initially you said you may not have sound, but I thought you did have sound. Yes,
yeah,
okay.
First of all, I want to say this is great. A lot of information, so thank you.
You're welcome.
So this might be kind of nitpicky too, but the W-9 form, if we utilize the same subs over and over again, do we have to have them fill that out each year? Or is it like you fill it out, you give it to me because it's just for my records and I don't have to get it updated?
Right. So I don't believe there is any annual requirement for it. However, with that said, you really should have them do it, because what if they changed from one type of business structure to the other? So normally you send a 1099 to a sole proprietorship. What if they became a corporation and you no longer have to send them one? Then you don't send them one. I mean, you can, it doesn't hurt to send them one, but why go through the extra work to do that? Or vice versa. Maybe the guy that's doing work for you, especially if it's someone that you don't know real close. What if they were part of a company, either an S corp company where you didn't have to send them one, or maybe they were a part of a sole of a part of a sole proprietorship or partnership where you always sent one to this one, but you didn't really know. Maybe you just didn't find out that they went out on their own and did this job for you on their own. So you shouldn't be sending a 1099 to a different company than who they are. So there's different reasons why I really think it'd be a great idea to have them fill out a 1099 or a W-9 every year.
Okay. Then my next question is, so we have a landscaping business, and basically, I was told that if like we do a lot of mowing, then that would be, you have to put sales tax on it. But if it's more like landscape, mulch, that type of thing, you don't have sales tax. So is there a place where I can look to see like what is subject to sales tax and what is not subject to sales tax?
Great question. Yeah, let me see if I can find that for you here. Don't have that number memorized, so we'll see if this tells me here real quick. Yeah, okay, let me make sure that's it. I think it is Rev 717. That sure looks familiar. Yes, do a search for PA Rev 717. And the first result for me when I did it on Google, it was a PDF. And so I was able to open up the PDF, and then I'll be able to download it to my computer and have it and so forth. And it goes through a long list of things that are taxable and not taxable. There's a lot of reading as you go down through, so you kind of skim it. But for me, when I got down to page 11 right here, it's like bullet points, like a list of items, and then there's either a T or an NT beside each bullet. And so and it actually categorizes it. So the first category is books and stationery. So Bibles are taxable, comic books are taxable, crossword game books are taxable, and so forth. So as you go down through here, I am sure you're probably going to find your answer to what you're looking for. If you don't, then definitely reach out to your local SBDC business consultant. And if they can't help you, then reach out to me, and I'll be more than glad to find that answer as well. And I know I've done that research before, but I don't have it memorized. I'd have to look it back up again, because even sometimes landscapers do snow plowing in the wintertime. So you need to know if that's taxable. And I don't think snow plowing is taxable, but again, don't quote me on this. However, when you're using salt as part of that snow plowing job, then I do believe it becomes taxable, because you're using a product, a taxable item. So with that said, check out Rev 717. And if that doesn't get you the answer, then reach out and let me know.
Okay. Then one more question. At the beginning, I kind of told you that I was kind of going back and forth between my my tax guys, because they split their ways. So basically what they're going back and forth on is my depreciation that they used last year. And I think it boils down to, I have a piece of equipment that is a lease. So I'm assuming they couldn't use that as depreciation because it's a lease. But is there any way to tell, when I look at my tax returns and the number that they use, like, is there any way that I can calculate that easily? Or probably difficultly, I guess.
And you're talking about a lease?
Yeah, so I have a skidster. I lease it right now currently. And I'm pretty sure that like one of my tax guys is saying that the other one used it as a piece of equipment for depreciation, but he's saying you can't do that. So I'm just trying to figure out, like, when I look at my tax return, and let's just say they had $100,000 on there, they're doing it over 7 years, and it equates to, you know, $10,000, let's say, that they have for depreciation. I'm just trying to figure out how I can determine those numbers that they used on my tax returns.
Okay. Okay. So let me ask about the lease real quick, and I may not be able to answer this question without like trying to dive deeper into it. Is this lease a lease where where at the end of the period there's going to be a buyout to it?
Yes.
And okay, so again, without researching it for sure, but I think a lease that has a buyout at the end. And do you plan to buy it out?
Either buy it out or we'll get a different one or the other.
Okay, so you may or you may not buy it out.
Yeah.
So I think a lease with a buyout can be depreciated, can be an asset on your tax return. However, that little bulb went in my head that said, you know, are you going to buy it out or are you not going to buy it? If you know you're going to buy it out, then that might be the avenue where it's an asset. Whereas if you know you're not going to buy it out, then it wouldn't become an asset. So, without diving deeper into it, I'm not sure I'm going to be able to answer that question. It's gonna take, you know, if you have two people from the same that were in the same business that are, you know, arguing one against the other, I guess ultimately, you know, have they shown you any paperwork, any research? You know, did they send you something by email that would show why or why not it should be on that tax return as it is?
They haven't. The one actually said that he was going to redo my taxes and amend them for me for free. And the other one, I was going to reach out to him and just say, like, hey, can you tell me what assets were used with depreciation just so that I can see it?
Right. Yeah. Yeah. So, so the depreciation report, okay, that doesn't always print with a tax return. Sometimes you do have to ask for that. But that would be a good thing to ask for. Really, you should review that depreciation report every single year when you're getting your taxes done, so that because maybe you threw something away that's on that list, or maybe you sold something that's on that list, or maybe you bought something else and you didn't tell the accountant about it. By getting that depreciation list every year from your accountant, either tell them you want it when you get your tax return each year when you pick it up, or better yet, I think it's always a good idea to get it before the tax return is all done. Okay, maybe you don't get it until you drop stuff off. Maybe they email it to you later, but before your tax return is done every year, people, you should have a depreciation schedule in front of you so that you can look down through it and verify whether the information is correct. Now, as for the calculations, the numbers on there, I mean, yeah, you're not going to know if that stuff's all correct, but at least you'll see the assets that are listed on there. So going back to that lease, so it does sound like it is on there, and so it should show up on the depreciation schedule. Again, comes down to should it not be on there? The one accountant says it's not. So thank you. Just 1 second, everybody. Will it reach here? Do I need to move my computer? I apologize, everybody. I thought my computer would last a measly hour, but it sure didn't. So I'm plugging it in. So just 1 second. Thank you, Jason. On computers, after a while, the batteries don't last as long, right? So I have learned my lesson that it doesn't last an hour. There now, I'm good though. I'm plugged in. So, so coming back to that, the one accountant says they'll amend it. He'll amend it for free. And change the way it was on there originally. I just wish if I were you, I would wish to just see something on paper, you know, in my terminology, because the tax law is disgusting to look at, but just show me something in my language that says that this asset should not be taxed or should not be on the tax return as it is. or from the other accountant, show me why it should be like that. In a case like this, and normally, I mean, I wouldn't, I mean, you can't question the accountant for everything, right? But in a case like this, where you have two people disagreeing with each other, it's like the one must think it's right and the other must think it's wrong. So I got to kind of figure this out now.
Right.
Hope that helps a little bit.
It does, greatly.
Okay, let me see here. Who else would have a question? I got to bring my chat back up here. Do we have anything in the Q&A? Okay, I do have a Q&A here. I just Googled, can an equipment lease with a buyout clause be depreciated yearly? And go what seems to be some good info from accounting firms and also an IRS link, keep or toss. Okay. So yeah, so definitely do your own searching to see what they can find. Some of the ways that I've come up with some quick answers, but I know I even said it today that it was a quick search. Okay, but try using AI, artificial intelligence. So there is Chat GPT or there is Gemini. I use Gemini most of the time, but I also use Chat GPT sometimes too. There's free versions to it, so just use the free version. I find they work pretty good. But a lot of times what I'll do, and this is what I know Gemini does it, is if I ask it a question and it answers me, it normally always has like a little like paper clip at the end of like a paragraph or something, and I can click on it and it gives me the link where it pulled that information from. And so, I mean, I don't know how much you're on the internet and that, but if I open up that link and it takes me to a website, if that website looks like a good website, such as what John's mentioning from accounting firms, then that's probably pretty good information. If it's just from something that just doesn't look to me like a good resource, then I'll probably do even more research to read it. If it's pulling from the IRS website, I mean, yeah, absolutely. I mean, that's good information then. But so do understand AI is wrong a lot of times. It's never, I don't think it's ever going to be completely right because it pulls its information from the internet, and we all know the internet's full of a lot of garbage too. So with that said, you have to be able to decipher whether what it's telling you is true or not. And so I always say, do the quick search, see what it comes up with, and then dive deeper into it to see what better information you can find. Okay. And Google as well. Like my Google normally gives me an AI response right off the bat as well. So I mean, of course, love using Google. Let me see here. Mandy, go ahead. What's your question?
Okay, I'll make this quick because this depreciation conversation, just like I know I'm about to go down the depreciation rabbit hole, so we're not going to do that right now because I know it's almost over. But a quick question. If you're dealing with depreciation for stuff, so in the conversation you just had, I'm not sure what her name was, but she's paying monthly on a piece of equipment, but then they're also dealing with the depreciation of that equipment. What can you write off the monthly payments for that equipment and also deal with the depreciation of it, or is it one or the other?
It would be one or the other. Otherwise, you would be double dipping. So let's ignore the idea of a lease initially. Okay, let's just look at a fixed asset. Let's just say a building, although cars, equipment, computers, furniture, and fixture, they're all assets. But let's look at a building valued at $100,000, and you're buying it with a loan. So the IRS will say that you have to depreciate that building for 39 years. That means take the cost of that $100,000, spread it out over 39 years. That'll be based on some weird calculations by the IRS called, it'll either utilize acres, which is an accelerated method of depreciation, or makers, which is a modified accelerated depreciation system. It'll probably use one of those two. And the $100,000 gets spread out over those 39 years. That is like you making your loan payment. Now, your loan payment includes both principal and interest. The principal part of that loan payment does not get written off on your tax return. That's where the depreciation comes into play. The interest portion of your tax return does get written off on your tax return, because the interest doesn't really have anything to do with the cost of that building. That's just the interest that you're paying to the bank because you borrowed their money. So you get to write that off, but the principal payment you don't. It's the depreciation. So now if we throw in a lease, okay, a lease is basically the same thing. A lease is paying for the value of that asset over a period of time. And so if you're writing off on your tax return the lease payments, then you definitely wouldn't be able to depreciate it. It's going to have to be one or the other.
Okay. And so my husband, he has a contracting business. Would it make sense that, like, he has a bunch of tools, you know, obviously he has an incredible amount of equipment. Should we be like valuing the equipment, depreciating it? Like, is that something we're missing?
Okay. So you're not leasing the stuff, right?
No, he owns everything outright.
Yeah. So anything that you own that has a useful life of more than 12 months is considered a fixed asset and therefore should be depreciated. Now, if they are small dollar amounts of things that you're buying, even in my mind, even $100, $200, you could probably just throw that in as a small, as an expense on your tax return called something like small tools and equipment. And if there's small purchases, just throw them in and write them off immediately that year. But if you're buying something more expensive, then it really should be spread out. And so it's best to, if you're buying things that have a useful life of more than 12 months, it's best to keep a list of them and have a description of what it was you purchased, the date that you purchased it, and the cost that you purchased it for, and give that to your accountant. And then your accountant can look at it and decide what to write off 100% this year as not even a depreciation, just as a small tools and equipment expense. Or they might look at some of them and say, oh no, we should put this in as a fixed asset for depreciation purposes. Now, when we jump into that realm of let's make it a fixed asset for depreciation purposes, there are options to allow you to maybe even still write that fixed asset off in the first year. So there's what we call Section 179 deduction. That can allow you to write off a lot of types of equipment immediately that first year. There's also bonus depreciation, which I believe in 24, because that's the year it just finished, I believe the bonus depreciation is 50% of that value. So you'd write off 50% rather than if you just went with regular depreciation in that first year, you might only write off a small value because you really bought it partial throughout the year. So you can either write off a small amount or do bonus depreciation where you write off 50% of it in that first year. And then so those are your two main types of, like, if you want to call them bonuses, Section 179 or pure out bonus depreciation. Otherwise, you just have normal, it's not normal, but it's your acres or makers depreciation. So there's a lot of different avenues to go there. And the reason why I would say to make a list, let me get back to that. The reason I would say to make a list is because your accountant, who is working for you, trying to save you as much money from the government as possible, sometimes when it comes to your list of depreciation, in my mind, with someone as an accountant, by trade, by experience, here is that would be one of the last things I'd want to do in your business tax return is the depreciation, because if you're showing a pretty big profit at the end of the year, I may say, oh, let's take some bonus depreciation, or let's take Section 179 deduction on these assets in order to bring your profit down for the year. Okay. Or if you're not showing much profit at the end of the year, maybe even a loss at the end of the year, then I'd be like, oh, I don't want to take any bonus depreciation. I want to just take normal depreciation so that you have more depreciation in the future rather than writing it all off immediately this year. So I don't know if you'll ever know if your accountant does it that way or not, unless they explain it to you. I know I used to explain it to my people that that's what I was doing, and I would explain exactly as I did with you why I was doing it. And I think that's a good direction to go. If they're just putting it in there and just not even using any brain power for it, then in my mind, what are you paying them for when you could do it yourself? You know, you're paying them for their expertise is what you're paying them for. So I hope I answered your question.
You did. Thank you very much.
You're welcome. I mean, let me see here if there's anything in the Q&A. No, that looks like everything. So did I get mostly everybody's questions answered today, hopefully?
Yeah,
I
Corey,
hope
can I
so.
just ask you one real quick?
Go ahead.
One more real quick thing on the 1099. So when I look at the 1099 and I pull it up, there is a section that says non-employee compensation, which I'm figuring that's the dollar amount for whatever I pay my sub. But it also has federal income tax withheld, state tax withheld. And do I necessarily need to withhold for like whoever my sub is, or is that the responsibility of my sub?
So in most cases, you do not withhold tax from them. I don't have off the top of my head the rules on whether you need to withhold or not. So that would be something you might want to look into or reach out to your SBDC consultant. But in most cases, you do not withhold any taxes.
Okay.
Good question. Okay, I am going to open up the chat here, and I'm going to send a chat to everybody with my email address in case you don't already have it. And again, I always ask that you please first reach out to your local SBDC consultant for any type of business related question, which includes these tax related questions, and see if they can answer your question, or somebody in their office might be able to answer it. But if they can't and they're not able to get you the answer, then you can always say, do you mind if I reach out to Corry Riley at the Clarion SBDC? He does his tax talk. They'll say, oh, absolutely, go right ahead. And then reach out to me, or don't even tell them and just reach out to me. But I'm just asking that you talk to them first. The reason for that is if you're from outside of my territory, then understand that I'm busy with my area, that to take on other work from other places is extra work on top of me. So I don't want you to just come to me first. Okay. I need you to go to your own people first, but I am here to answer your question. That's why I love working with the SBDCs, because I can share my experience with you and it doesn't cost you anything. Okay. That's what's so great about it. So I'm going to let everybody go today. I thank you very much for tuning in. Again, come back every month. And even though you'll see Tax Talk each time has a specific subject that I'm going to talk about shortly, you saw here today where we didn't just talk about the 1099. After I'm done with that little presentation, it's open game for everybody to ask their business related questions to me. So feel free to come back every month and ask your questions. Otherwise, have a great day. Enjoy your weekend. Enjoy the cold. It will warm up soon. Take care, everyone.
Thank you. Bye.
Thank
Bye-bye.
you.
You're welcome. You're welcome.